Hello traders, welcome back to another episode of our weekend Forex market preview. As you can see, as I have up here on my screen, do you remember this bad boy? If we scroll down to a video, one of our first videos is an hour-long video where we had a thorough, some kind of a lesson where we tried to explain Forex and our trading philosophy. So today, I thought that I'll just take you through the market using our trading philosophy and show you how do we use our philosophy and apply it to the actual market for this week's preview. Now, this week, we'll be taking a look at the Euro Pound. We will be looking at a possible, let me not spoil the surprise, but, so yeah, let's get straight to it. So the first thing we also want to do is I'll first try to explain to you the philosophy and then go to the charts and try to apply what we've been looking at on this time frame. And guys, if you want a copy of this philosophy, please head down to our videos. The first video in the hour long, you get this thorough explanation of this trading philosophy. So the first thing, we also want to go down to a high time frame. As you can see, we always use three kinds of time frame. Hence, you always see from our preparation, we use what we call a top-down analysis. So the first time frame that we also want to go through is our high time frame. Depends what you're trading. You can use the daily as a high time frame, where in that case the intermediate will be the 4 hour and the lower will be the hour. Or you can use the 4 hours as your high time frame. Then the 1 hour will be your intermediate, and then in 50 minutes will be your lower time frame. It just depends on which time frame you prefer to trade. Okay. So the first question we also want to ask ourselves on the high term is, what has the market done? To break this question down, what it actually means is that, what direction is the market taking? Is the market bullish, bearish, or are we in a sideways market? In order to help us to identify the direction of the market, we can use two trend lines. If the trend line is sloping to the upside, then evidently we'll be in an uptrend. If our trend line is channeling to the downside, then of course we're in a downtrend. And if you just have a constant horizontal trend line, then of course we'll be in a sideways market or consolidation or a range, as some people like to put it. So first question on the high time frame, what has the market done? Meaning we want to identify the direction of the market. Are we up, down, sideways? And once we're done, this is where we come to a second step. This is where you want to form a trade bias or a decision. Meaning, after identifying the direction, are we now buying, selling, or standing aside? And then finally, our last step on the higher time frame is that we want to identify or daily structure. Okay, hence I emphasized, or hence I mentioned in the first part, it's not always a daily structure. If your high time frame is the 4 hours, then it will be the 4 hour structure. But in our case, we'll be using the daily chart, so we want to identify all the daily structure. Let's say, for example, we're in a downtrend. So price action is sloping down. Now, step 2, we want to form a trade bias. If the price action is sloping down, then we want to be involved in the market as sellers. We want to go with the market, not against the market. So we'll be sellers. And again, the last thing we want to do is identify the structure. If we're preparing for a selling opportunity and we want to look at all possible structures, the first structure we want is price action should be at a supply level. And what we want to see the daily structure, we want to see two things. Did price action either break out of that supply level? For example, if we were in a downtrend, did price action break out of the supply level? Did it halt or hold? Or the last step, did it reverse from that supply level? So let's go through a chart and try to put this into practice. Okay, so the first thing we said we want to do from our philosophy is that the first question we want to ask ourselves is, what has the market done? To break that question down is, which direction is the market taking? Now, if it's hard for you to see, what direction the price action is taking, we said that you could use a trend line. Take this trend line from the lower left of the screen, from the lowest low from the left side, and if we pull price action up, evidently in this case, our trend line sloping to the upside, giving us a signal the price action is in an uptrend. So far we've answered the first part of our question on the daily time frame. Now the second step, and this is the most crucial step that I see most traders, most amateur traders like to skip this second step, where you want to form a trade bias or decision. Now the importance of a bias is that, have you ever came across a situation where you come to the higher time frame, after looking at this you're like, cool, it's a buying opportunity, but now because you didn't exactly set a bias or decision, whenever you go to the lower time frame, and this happens a lot of the time, whenever you come to the higher time frame, you see a buying opportunity and everything sets up perfectly for a buy setup. Whenever you go to the lower time frame, what usually tends to happen is that the lower time frame, in this case the 4 hours, likes to contradict with the daily chart. Now it doesn't mean that price action is going down. What usually tends to happen is that on the 4 hour, this is a short-term trend, and on the daily chart, this is our overall bias and long-term trend. So what we want to do is that we want to fade the short-term trend, which in that case, the trend will be seen in the 4 hours against the long-term trend. So this is the importance of us forming a bias on the higher time frame. Did you understand that? Is it clear? Was a wobbly? Is it clear? Was that okay? So let's just move on, guys. I just get a little bit ahead of myself at times. So I want to form a bias. So in this case, price action is in an uptrend, so we'll be looking for a buying opportunity. I think that's easy for everyone. If price action is going up, we want to buy. If price action is going down, we want to sell. So we've answered part 2 of the question. Now the last step we want to do on the daily chart on the higher time frame is that we want to identify all significant structure levels, where in this case you'd see I've already drawn them out for you. If you're with us, I think it was a week back or 2 weeks back, we had analysis on the euro pound and the euro pound. Yeah, it is the euro pound. And yeah, this is the structure we did identify those past weeks. So we're still using the same structures, still holding, still significant structure levels. Okay, so basically our job is done on a higher time frame. With this said, after identifying the direction, forming a bias, forming your structure levels, and hence again, as you can see, we're in a buying opportunity. So are we looking for support or resistance, a demand or supply? Of course, if we're looking to buy, we expect past resistance. Let me grab this. We expect this past resistance to become a future support. If we are buying, we expect past resistance to become a future support. I think this is just the basic of the basics. If you don't know if this will pass up or should become a future resistance, I think you should go back to the basics and stop focusing on more advanced stuff. Just go back to the basics. And this is the most fundamental and important things to trading. Past support becoming a future resistance. So this prepares us for a buying opportunity. So with all this being said, just taking a look at our philosophy, you can move down to the higher time frame. Already you don't need any more stuff for you to complicate yourself. With all this, the direction, the bias, and the structure levels, you're done. You don't need anything further from this case. Now, because I know there's some people who've been with FX Link, who want the more bit of advanced stuff and want to improve their trading. Okay, so there are some other factors I'll be looking at. First off, additionally from trading philosophy. Now, again, I emphasize, of just all the things we identified from the trading philosophy. You don't need any extra of these things I'll be adding, because of the trading philosophy on its own, the direction, the path, and the structure level, you're good to go. All this extra stuff is just to strengthen your case, but structure, the first part, you're good to go. So another thing I'd like to do, just to add on from original what I'll be doing, is to add my favorite placement from this initial leg. I take this from my X back to my A leg. So let's try to zoom in, and as you can see from our Fibonacci, from overall retracement tool, let's just say we get a 618. I primarily use retracement tool for turning points. As you mentioned, we're in an overall uptrend, but as you can see, we have a bit of a downtrend over here. The overall trend is up, but we had a bit of aggressive sellers at this point. Now, because we're in an overall uptrend and we see a bit of sellers coming in, we want to see key turning points. Where is the market going to reverse and continue on an uptrend? Now for this is what I use my Fibonacci tools for. And as you can see, we've hit a 618, which is one of my significant levels on my retracement tool. I primarily use the 382, 618, and 50%. Where once 618 has more significance than most of the other Fibonacci levels. So as you can see, we've hit 1618. Now this is just an addition from what we were initially looking at. From the initial philosophy, this is just one add on just to strengthen our case. Now for the first part, we say we've added the retracement tool. We've hit our 618. Good. Now we're building a case for entry, strengthening our case for entry. After getting a 618, what else do we see? Right here at this level, I see what others like to call an M formation or a double bottom. Doesn't really matter, but the original name for it is a double bottom, and I would expect to see an M formation. This leg shouldn't surpass this lower leg, and so you'd expect a continuation to the upside. Now from everything we've been looking at on our hard time frame, I'm pretty confident, I'm heading down with a solid bullish bias and heading down to a lower time frame. I'll just be looking for buying opportunities. Okay, so what else do we have in our philosophy while heading down to a lower time frame? So at this point, I hope you understood the first part of our trading philosophy. Now, the second step is to head down to an intermediate time frame. We're done with the high time frame. We want to get to the intermediate time frame, where in our case, we'll be using the 4 hours. So first question we get to whenever we get to an intermediate. From the past we formed on the high time frame, first question is, how will the market get there? Well, in our case, we said price action will be going up. Now, how will the market go up? There are two options, there are two things involved in that case. First part, will the market shoot straight up? From price action where it's currently at, can price action market open away, bias aggressive, and price action just shoot straight up to the top? That's a possibility. As you know, the market could do whatever it wants, whenever it wants, however it wants. So if it wants to, it can shoot straight up. If in that case, it will be going bullish. The second thing it could do whenever going up. Now, there's just a lot of variations price action could do, but this is just how we've backtested the market, and this is our style of trading. So the second thing price action can do is that it could form what we like to call an ABCD pattern, a 1, 2, 3 pattern. Now this is just a simple retracement pattern where price action shoots straight up, gives the retracement, and continues to the upside. And try to make it a little more simple for all those who are just new to trading, and call it a 1, 2, 3 pattern or an ABC pattern. So yeah, let's see again. Let's go back to the charts. Okay guys, time is against us, so we'd have to make this a little more quick. We have to pick up the pace now. So simple, how will the market get there? We said we'll be in an uptrend, so we just want to know how the price action head to a take profits. The first thing we said, where price action is currently at, the market could shoot straight up. That's also a possibility. Or price action could head to the upside, break this resisting resistance level. From there, come back to give us a support, and this is what we call the 1, 2, 3. These are our two possibilities. So how do we plan on taking advantage? Price action has two ways of going up, but in our case, I like to use a retracement tool. Okay, from this leg, from this lowest low back up to this area. Okay, let me try to zoom in, and as you can see on the 4 hours, price action pushed up, came back to give us the retracement, way again back to a 618. Now why did I mention it was 618? 618 is one of my significant structure levels. Now because we've already hit a 618, I will looking to take this trade aggressively, meaning I will looking to take it at this area, expecting price action to shoot straight up to the upside, because at a 618, this is where price action is more likely to reverse. So at this point, I will look into getting involved, hoping price action, even if price action does shoot straight up to the upside or form a 1, 2, 3 pattern, I'd still be looking to take this trade aggressively at this area, meaning I won't be waiting for a 1, 2, 3 pattern. I'll be just taking it aggressively, anticipating a shoot straight up. Now once that is out of the way, we've answered the price action is going to go to the upside, but how far will price action be most likely to go? Because you just can say price action will go up, but how far up? And this answers the question of our take profit. Now for this, I'd use my extension from this X to A back to X at this area. This is where we get our 1618, and here we get our 127. Okay, and again I'll use my retracement tool from this major leg, from this X to A. This is where we get 382, back at this resistance structure. So I'd give this structure more significance. So I'll pull this down back to my this retest of structure. This could be my first area for a take profit because it's right at my 382 retracement. And the second area I like to take is that let me narrow this down. This is where we get our 618 retracement. Okay, so we have identified two levels that we were looking to take profit. First off, around our 382, and finally around our 618. So lastly, you would have to head down to the 60 minutes. So I'll be looking for two things. First off, as I always try to emphasize, I'll wait for a retest of the structure, wait to get a valid double bottom, and then from here I'll be looking for price action to head up. So everything's complete at this point for me to take this trade. All I'll be waiting for will be price action to give me a valid double bottom. After that, I'll be waiting for the next bar market, and hopefully I get a bullish divergence at that point. And if all that does confluence everything I want, assuming that we get entry point somewhere around this area, this is how our trade will look like. First take profit again, we say we're going to be a retest of structure. This structure where it's around our 382 level. Stop loss would have to be, assuming that we complete somewhere around this area, 6 pips below. We'll be looking at a total stop loss of around 16 pips to 20 pips, depending on where we get a completion of our bottom. So already at this point, this should be our first take profit. And as you can see, we're looking at a trade of risking 20 pips for a total take profit of 80 pips. Now, if you're looking to be more conservative, you'd go for the first 3 tiers of structure. This 3 tiers of structure, where you will looking at a total take profit of 41 pips. Already at this point, you will looking at a 1:2 type of trade. And if you're looking for initial first take profit, you will go back to 3 tiers of structure, 382. And for standard targets, we're going to go back to where we got our 1618 retracement and extension, back up to this area. And in total, we're looking at around a take profit of 159 pips. So yeah, guys, I hope you enjoyed this video. Please make sure to hit the thumb button below, and don't forget to hit the subscribe button. For me, your friends, see you next time. Peace.